Hey guys, how's it going? Lewis Harding Investor here and welcome back to my channel, and in today's video I'm going to be analysing British American tobacco stock using fundamental analysis. And then I'll be using a DCF valuation to come up with a fair value for their stock. Let's get straight into it. So who are British American Tobacco? So they are a British multinational company that manufactures and sells cigarettes, tobacco and other nicotine products. The company was established in 1902 and it is headquartered in London, England. As of 2019, it was the largest tobacco company in the world based on net sales. So they have operations in 180 countries and they have all sorts of cigarette brands such as Dunhill, Kent, Lucky Strike, Pall Mall and Rothmans. It also has all sorts of vape brands as well. They have a primary listing on the London Stock Exchange and they are one of the constituents of the FTSE 100. Now looking at the sales of the business, and as you can see, combustibles, so normal cigarettes, make up the vast majority of their sales. In 2019, 89%, and in 2020, 88%, so basically most of their sales come from there. And then a few other segments such as traditional oral, tobacco heating, vapour, other modern oral. I don't really know what they are, to be fair, and you'll have to probably research that if you are looking into their stock in more detail. Sales per region, 45% in 2020 in the US. Europe and North Africa make up 23%. Asia Pacific and Middle East make up 18%, Americans and Sub-Saharan African make up 15%. Now onto the income statement extract, which has been taken from macro trends, and all the numbers are in US dollars. Looking back for the past 5 years, 2016 their revenue was close to $20 billion, and in 2020 it is 33 billion. So sales have increased massively, and this is due to a large acquisition that they made back in 2017, 2016, and that's why the sales have increased quite a lot. Then looking at the net income, that's also increased, which you would expect after acquisition. And yeah, you can probably see from this that tobacco companies are very profitable businesses, however unpopular they seem to be. They do have very decent margins indeed, and they are very profitable. Basically just known as cash cows, to be honest. Now onto the balance sheet data, and for the past 5 years, let's have a look. Long-term debt, yes, you can see this has increased by a decent amount. Their acquisition they made a few years ago was financed mostly with debt, so this is why this has increased so much. You will want to see this being paid down over the coming years and managed in a certain way. You want their cash flows to be able to cover their debt in case anything goes wrong with the business. However profitable these companies are, you do want to see debt being repaid, because it is a risk at the end of the day. Then the other figure I look at is the returned earnings figure. You can't really use this too much, because you can see in 2017 it was like $48 billion, and then in 2016 it was $5 billion. So some funky accounting going on there due to the acquisition, and you'd have to look into that a bit more because it's just a bit strange when you look at it. But yeah, overall you want to see that returned earnings going up, which as you can see is gradually, so that is a good sign that they are adding value to shareholders. Now let's have a look at the cash flow statement, and you can see from the top figures for net income, very juicy, they are making a hell of a lot of money, and they are an absolute cash cow like I said before. And then yeah, the cash flow from operations, pretty inconsistent after the acquisition of Reynolds, up and down a little bit, but you want this to stay at a decent figure over time so they can pay the dividends, buy back shares, etc., and pay down long-term debt. And then some other figures I look at on the cash flow statement is the net long-term debt. So this can tell you, so 2017 you can see they issued $26 billion to acquire Reynolds, so you can just see it there and it makes sense. But otherwise they've been repaying the long-term debt after that, which is also a fantastic sign, and that's a good trait going into the future. And then having a look down, and the total equity reissued / purchased, they have been repurchasing shares even if it's not been by much, which is decent to see. And then also a good one to see is the total dividends paid. You can see you want this figure to be increasing over time, because you want the company to be increasing dividends year on year, because over time this increases your returns, and they are doing that exactly. So that is one of the big traits of tobacco stocks. They like to pay big juicy dividends to entice investors, and I believe at the minute British American Tobacco is nearly 8% dividend, so that is very, very solid. Now let's have a look at the key financial ratios for British American Tobacco, and start with the current ratio. I usually like to see this above 1. because it means that all their current assets can pay their current liabilities, but it doesn't quite hit the mark. Long-term debt to capital, this is fairly decent, very manageable, and you'd want to see over time this go down as well, which hopefully it does as the company makes profits and pay down its debt. Gross margins, they've absolutely smashed this. They do really well with their margins, and it looks like they are increasing them as well, which is also a very, very good thing, especially for companies in an industry which is, you know, stagnant. The tobacco industry is unlikely to grow much unless you're looking at emerging markets in particular, which British American Tobacco does have a very good portion of their sales to, and it probably will be their growth in the future will be in emerging markets. But yeah, anyway, so net profit margin, very solid as well, in the high 20s, mid to high 20s I must say. So yeah, doing fairly decent there. And then the last one we'll look at is the return on equity. So I like to see it above 15%. Now onto my analysis checklist for British American Tobacco, and let's start with the market cap. So this company is a £61 billion market cap, so a very big business in terms of, for the UK, one of the biggest in the FTSE 100 index. And then looking at pillar one, we're looking at the profit margins, so they absolutely smashed my expectations out the park, 5-year average wise, high gross margins, high net margins, fantastic stuff. Return on equity, I like to see a 5-year average of 15%, because this indicates high quality businesses, and it does pass, but unfortunately over the past 3 years it's been closer to 10%, so maybe going forward their returns on equity aren't going to be as good as they were before. Long-term debt to equity is very manageable, below that 50% mark I look for, and hopefully over time this decreases as well as the company makes more profit, more equity, and pays down debt. The current ratio is below 1, which I did explain before and I won't go into again. Proven ability to grow, I won't look into this too much because of the acquisition. It will make revenue, net income and free cash flow growth. It will, you know, make them bigger numbers, and you would expect that, so you can't really read into that too much, but they do pass on it. Then great capital allocation, this is probably one of the main sections I look for because it shows how much shareholders are getting rewarded. Long-term debt repayment, as we saw before, they issued like 26 billion for their acquisition of Reynolds, it looked like, so that's a fail of course, but over time I want to see that figure going down. Dividend growth, 5-year, they've been increasing their dividends, so fantastic. Decreasing share count, it hasn't been decreasing, it's slightly increased. So like I say, you want this figure to go down. Good acquisitions, I'd say overall the Reynolds acquisition has been good for shareholders, increased market share in terms of US, and you can see revenue, everything's grown as well, which you would expect, but that would be a fail if they acquired the company, it just didn't work. So anyway, buy at a fair price, the P ratio, very attractive at current prices in my opinion, at nearly 10. Price of free cash flow very low as well. And then looking at my DCF valuation, so for a 10% return, I'm looking at a share price of £49. So from the current price of £27, we're looking at an 83% uplift. So yeah, it's looking quite attractive right now. But let's go into the DCF valuation to see how I got to that figure. Now let's have a look at the DCF valuation for British American Tobacco, and for a required rate of return of 10%, I'm looking at a share price of £49 for this company. The free cash flow figures are fairly reasonable, and as we saw before, they are very consistent with their profits and cash flows. So yeah, I think it's fairly reasonable to suggest that they are worth £49 potentially. So what are my thoughts on British American Tobacco? So full disclaimer, I own the shares in this company, so I might be a bit biased of course, but I still do have an opinion. I believe that the British tobacco stocks are currently trading at fairly low PEs. I believe Imperial Tobacco is a lot lower than British American Tobacco as well, and their dividend yield is like 9%, so I might have to do a video on them as well at some point. But in terms of this company, I think it's been mispriced by the market completely. Even if we don't get to like a PE of 15, even a little bit higher is probably justified based on what cash flows they've got. The company is, you know, it's just a cash cow. It pays massive dividends, so close to 8%, which I'm, as a shareholder, very happy to receive into my ISA, so I pay no tax on that, which is fantastic. But even if the share price doesn't do much, I'm still getting a return of above 7%, so it's not that bad. And if the market does think they are worth more in the future, I will also see, you know, capital uplift in my shares. And I think it's a bit similar to the oil sector, where the market, big investors think that oil is just going to go away in 10 years' time, whereas I don't really think that's the case. I think there's a lot more uses for oil. Anyway, this video isn't about oil, I'll shut up about oil. But tobacco, people have been saying since the 90s that tobacco is just going to go out of business. And eventually, I think it will. It will be a small part of the market, but I just don't think it's going to happen overnight. And these companies have big brands, people who smoke are loyal to their, brand. Like people, buy their favourite beer, people buy their favourite cigarettes, don't they? So it's a bit all hand in hand. But what British American Tobacco has, in my opinion, is a bit of an advantage over the others, such as the American counterparts. So British American Tobacco has a large, like I said before, 180 countries it operates in. If they can dominate in emerging markets, places where the population is going to continue growing, the middle class, a growing middle class, so more people with more wealth can smoke better cigarettes, for example. They can have big impact there. I think in the Western world, cigarette and smoking is 100% going down, for sure it is. Since the 80s it's been going down massively. The 80s was like the peak of cigarette smoking in the world, and from then it's just declined. But there will always be a market for it in some shape or form. So if BAT can get emerging markets such as India, Southeast Asia, Africa, Brazil, all of these places, and hopefully over time this can just keep them ticking along and increase earnings alongside inflation, and they'll be more than fine. So that's what I'm looking forward to. I believe tobacco stocks, a lot of people don't like them, that's fair enough. You don't have to own these stocks. I personally own one of them because I think it's a decent company. But yeah, we will have to see. Personally, I wouldn't want more than one in my portfolio because there's that risk that tobacco just dies and then shares are worth not as much as I thought. But it is what it is, it's one of those things. So I wouldn't want a full portfolio of them, but having one in there, I don't think it's too bad. So thank you very much for watching today's video, and if you want to get more investing content, why don't you sign up to my Patreon? So I've set this Patreon up for £5 per month. You get direct access to me, a full Discord server with the community, stocks I'm looking into on a personal level, and my full watch list, and you'll also get exclusive content and live streams. So yeah, head over there now and subscribe to me on Patreon and become a member today. So thank you very much for watching. If you're new around here and enjoyed the video, please leave a like and a comment, as it really does help me out, and subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.